Bloomberg Audio Studios. Podcasts, radio, news. This is Masters in Business with Barry Ritholtz on Bloomberg Radio.
This week on the podcast, wow, what can I say? Jaime Magyera is head of BlackRock's U.S. wealth advisory business, as well as running their retirement business. BlackRock is the $12 trillion investment giant, the biggest asset manager in the world. Jaime has been working for the firm effectively since 2001, where she began at Merrill Lynch Investment Managers, which was merged with BlackRock in 2006. She's risen through the ranks and has really seen every aspect of the wealth management and product services, everything from iShares to their alpha products to alternatives. She has quite a fascinating history, and there are a few people better able to describe and discuss how the wealth management business is changing and where it's going than her. I found this conversation to be fascinating, and I think you will also. With no further ado, BlackRock's head of U.S. wealth advisory business, Jaime Magyera.
It is so good to be here.
It's so good to have you. I've been looking forward to this conversation. But I want to, before we get up to the U.S. wealth advisory business and retirement business of BlackRock, let's talk a little bit about your background. You go to University of Pennsylvania undergraduate. What'd you study? What was the plan?
So I studied psychology. I went to University of Pennsylvania. My brother went there as well. My sister went there as well. Psychology major. I didn't have a plan. I didn't know what I wanted to do. I was that kid that loved working. So I had, any job I had when I was growing up, I just loved. I was a babysitter. I worked at a bakery. I taught tennis lessons. I did it all, and I loved it.
Taught tennis? Are you any good? You still play?
I'm incredible.
You play
don't
regular?
Ask my husband.
Singles or doubles?
So I don't play well or regularly any longer. There is a story behind that, which maybe I'll share with you. But my husband does play tennis. He's incredible, and he coaches at West Point.
Oh, wow. That's amazing.
Yeah.
So what was the first gig right out of UP?
So I was a psychology major, and I knew that I was fascinated with people and also with distribution. And I'll come on to that in a second, because I was a music person. I loved music. I wanted to be in the music industry. So my plan was, do I go FBI, criminal psychology, or do I go into the music industry?
Very similar.
Very similar.
But and I'm not being sarcastic, because you're profiling people who perhaps have certain deviant perspectives about the world.
Yeah. I'll leave it there.
Okay.
And so I had to make a decision. And so I was going towards the music industry. And so people always say, well, were you a performer? Did you sing? Were you classically trained? The answer is no. But I was fascinated with the business of music and the distribution of music. And so at that time, remember, it was kind of Napster, right? So like things were going
Wait,
from...
like late 90s? Is that what you're talking about?
Oh, yeah. So we're going from CDs to digital distribution. And I just found it to be fascinating. And what did that mean for the business and the implications for artists? And so I had this dream. I was going to be a big time record label exec. I had internships. I got a job. At the time, it was Sony BMG.
Oh, sure.
And then I realized, as I got my offer letter, that I wasn't quite sure how I was going to sustain my life, pay my bills. My parents helped massively with college, but there was some student debt that I had to pay off. And so at the time, my brother was a financial advisor. And so I called him up and I said, hey, big bro, what do you recommend? What should I do? And I was thinking he'd give me some financial advice. And his advice was, get a real job that's going to help you pay your bills. And then you can go back into music after. And so that's kind of how I made my way into finance.
So what was the real job?
So the real job was working at Merrill Lynch.
So your whole career, you've been in the same, more or less the same place.
Yeah.
That's amazing.
Yeah. And there's this theme as you kind of look through different things I've done throughout my career. But I started at Merrill Investment Managers, which was the asset management arm of Merrill Lynch. And I wanted to be the farthest thing away from markets because I had no experience. I didn't know what the markets were. I didn't even know what a mutual fund was. And so I joined Merrill as an analyst in their analyst program, and I was a technology project manager.
Wait, so as an analyst, did you become a CFA? Did you go through that process?
No,
or
I did not. So you get all of your Series 7s and everything else.
Uh-huh.
But I was responsible for, again, let's date ourselves here, the late 90s, early 2000s, e-business was the thing, right? So
it's going to be big one day.
It's going to be big one day. There's this whole thing called the internet. And so at the time, Merrill did not even have a website for their financial advisors.
How is that possible?
I know. Can you imagine?
2001.
Yep.
We're gonna wait and see if this thing becomes
Takes
anything.
off.
Right.
I have a feeling.
Right.
So
I have a good feeling about this one.
Yeah. So that's
unbelievable.
kind of where I started. And
did you help build out the first set of Merrill Lynch websites for their? Is this for outward facing, for clients, internally for advisors and brokers, or a little bit of everything?
For advisors and brokers.
Mm-hmm.
And so that's where I first learned, the role of the financial advisor and what it is to be a financial advisor and how you serve your clients and how hard it is and what it is to actually sell and support and serve those financial advisors. But that was the job. It was translating technology speak into business and client needs.
Really interesting.
Yeah.
So I know you've had multiple roles at both Merrill and BlackRock. Let's quickly walk up the ladder.
Yeah.
So from that, what was the next role?
So I always had this idea that I wanted to get closer to the client. So I would move, and you'll see over my career, I moved into roles that were closer to clients. So from there, I went into marketing, which you really learn strategic messaging and how to simplify and help people understand what you're doing. I then went into our retirement business, where there I used to help participants understand how to enroll in their 401k plan. I mean, literally going around the country, helping people figure out how to save and how to invest. And then I moved back into the wealth business, which is where I am today, along with leading our retirement business. And the wealth business was the first time when I came back into it that I actually had direct client accountability. And that was important to me because I had done technology and marketing and product and strategy and everything else, but I had never been responsible for helping to solve client problems directly.
And to clarify, you didn't just kind of move into the wealth business. You are the head of BlackRock's U.S. wealth advisory business. That is not like you're not just casually drifting into that space. You're running it. So let's talk a little bit about how you got there. So Merrill and BlackRock merged in 2006. When the dust settled, what was your title back then?
So back then, I had moved into marketing, and I was the head of marketing for our wealth business. Then fast forward to BlackRock acquired BGI and iShares.
I recall one of the greatest acquisitions in finance history.
And a theme for BlackRock on just structural growth and how we view where the world is going and how we meet the needs to be there. But at that point, leadership had asked me to bring together all of the retirement businesses that were legacy BlackRock, legacy iShares, legacy BGI, and I was part of that team.
In other words, turn it into one
unified
company instead of all these separate pieces.
That's right.
How long did that process take?
It was, every day was another step in that process. And, we learn over the years how important it is to integrate and to acquire. When you acquire, you're acquiring for capabilities, but you're acquiring for talent and culture. And so the match between the firms was really strong. And that helped us to integrate even faster.
So you began this process late 2006, and right around the corner comes the financial crisis. How did that get in the way or affect this entire post-merger situation? It had to be pretty disruptive, certainly on the client level. How did it affect what you were doing?
Yeah, of course it was disruptive. And I think this kind of goes back to part of the vision with BlackRock always was, and I mentioned the term structural growth, but what does that really mean? It means durable engines of growth, resilient engine of growth, growth that can persist market cycles. And so even through a financial crisis, the fact that we had our iShares ETF range, we had fixed income, we had equity, we had cash, we had everything you can imagine, and we had Aladdin. Remember, Aladdin, our technology platform, was massively helpful to so many firms and institutions and governments during that time. So we had multiple ways to lead through that and help our clients through that crisis.
Really, really quite fascinating. And back then, it was a couple of $1 trillion. Now BlackRock is what, $12 trillion?
Yep.
That's the largest asset manager in the world. I want to say Vanguard is probably 10-20% behind you, nipping at your heels. But between Vanguard and BlackRock, these are two of the most storied firms. And in fact, the new CEO of Vanguard used to run a division over at BlackRock.
Great friend of mine, Salim.
Which really just goes to tell. I recall interviewing him when he was at BlackRock and like, that guy's going to go somewhere one day. But what's fascinating is just how unbelievably successful the iShare business became. But people tend to think of, retail investors tend to think about BlackRock in terms of iShares, but BlackRock is really so much more. It's not only passive beta, but there are alpha-seeking strategies, and as we'll discuss later, there are alternatives. So there are a lot of things going on at BlackRock. As head of the U.S. Wealth Advisory, what is the core focus? What are the balls that you keep in the air all the time?
Yeah, so one of the things I love about the wealth business generally is that it is changing so rapidly. It's dynamic. Every day there is something new. Investor preferences are changing. There's different client segments. And as you said, it's not just about iShares. I mean, we have so many capabilities that we can bring to bear. And so when we wake up every day, what we think about at BlackRock is how do we make investing easier? Right? How do we get more people access to the capital markets? And that used to be public markets. Now it's public and private markets. But that's what we do. And when you think about our wealth business, we do that through financial advisors and with wealth management firms. So our job in our wealth business is to help advisors and the firms that they work for build better portfolios for their clients so that they can achieve their dreams. And we aim to power their growth, to help them scale their businesses so that they can do what they do best, which is serving their clients. And so that's what we wake up doing every single day in the wealth business.
So I've seen a variety of various BlackRock model portfolios. If you have a bond ladder that you have concerns about, you can run it by the BlackRock folks and, hey, here are your options. We really haven't talked about SMAs, which I know is a really fast-growing part of the business. Is there a priority, or are all these things just day by day, you're just checking off different boxes and working on different projects? Yeah,
so our priority is serving the client, meeting their need. And when we look at the wealth market and talk to advisors every single day, there's really three call them client segments, investor segments that advisors are trying to serve and win and build relationships with, and we're trying to help the advisor do so. So those three segments, think about the next gen investor, think about women, and think about high net worth. And we'll hit on kind of direct indexing and everything that we do through that. But if you think about those three segments, and it's a broad way to think about this, there's exceptions to every rule here, but next gen, what are we talking about? It's the millennials. Right? It's
and Gen Z.
And
right?
Gen Z, it's 44% of the population. So it is a massive number by quantity, but it's also a massive number by assets, right? That generation is going to inherit 70 trillion plus in assets over the next few years. And so what's interesting and what's different about these folks is that they want to invest in line with their beliefs. They're incredibly tech savvy. In fact, they trust digital and social more than they might even trust humans these days. But they want advice from advisors, and they want to invest in things that are new and interesting. And so you think about Bitcoin, right? Bitcoin, 80+% of millennial millionaires hold crypto. They're more inclined to use crypto than stocks and mutual funds. So what we were doing and investing and innovating in service of client demand is creating a Bitcoin ETF. IBIT.
One of, if not the fastest growing ETF in history, fastest to $1 billion, to $5 billion, to $10 billion. I haven't even looked at what it is.
85.
Unbelievable. This is less than 2 years old, right?
Yes.
That's incredible.
Yeah.
$85 billion.
Yep.
And no passwords, no lost this, no that. They've taken what was whenever I see the return claims for Bitcoin, I always have to point out, hey, 20, 30% of coins have been lost. Passwords have been lost, drives break. So subtract a third off of that. But really, it's this or zero. If you totally lost it, you guys have made this a traditional financial product. So it's pretty amazing. And we've seen like a general acceptance of, hey, everybody should have 1% or maybe a little more, a little less, whatever your needs are of some Bitcoin. And this seems to be the easiest way to do it.
I think we'll see a lot more of that too. I think we're going to see a lot of firms coming out now to say, we are actually going to allow advisors to incorporate this into portfolios on the fee-based side, on the advisory platforms. And so I think this is just the beginning, but it's also just a perfect example of if you understand where clients are going and you have the capability set to innovate and build products around it, then you can deliver those products to market and help advisors better serve their clients.
And IBIT's a perfect example of that. Really, really quite fascinating. Coming up, we continue our conversation with Jaime Magyera, head of BlackRock's U.S. Wealth Advisory business and head of BlackRock's retirement business, discussing wealth management and retirement. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. I'm speaking this week with Jaime Magyera. She is head of BlackRock's U.S. Wealth Advisory business as well as retirement business. So let's talk a little bit about both of these. I want to start with the wealth management business. This is more than just iShares. This is very holistic and comprehensive. Tell us a little bit about the U.S. Wealth Advisory business.
So our business is really focused on helping those advisors who are really trying to go after multiple client segments and help those client segments actually meet their goals. And so, we talked a little bit about Next Gen and kind of the millennials and Gen Z. The other segment that is just growing in incredible rates is women. Women today control a third of the world's assets. In a few years, it'll be 50%. It'll be 70% by 2050.
70%.
70%.
Wow.
And, part of this is, let's talk about what's driving this. Women are creating wealth, right? More women are having careers or reaching executive levels or starting their own businesses. Women are also inheriting wealth, right? From family or from parents. Women are also inheriting wealth. We call it the horizontal wealth transfer, right? Divorce or widowed.
Tend to outlive the husband.
Yes.
So it's a way station before it goes to the kids.
Absolutely. Absolutely. And women are, quite frankly, underserved in this market. Women were not seen as a significant growth segment in the past. And now people are starting to come around to, wait a minute, this is a very important segment that we need to get right. And women do things differently. And so advisors need to help women do things differently, and they need to serve them a little bit differently. And women, like to have impact. We talk about the fact that some people invest as a means to an end. Women tend to invest as a means to what's next, right? They want to impact their community. They want to impact their family. They're always thinking about what can I do with this money as opposed to I want to make more money. And so it's a nuance, but it's a difference that really requires a very personal relationship with a financial advisor and trust.
It's been fascinating seeing what was previously a male-dominated industry slowly awaken to the idea that, hey, women have money and they're going to continue to accrue more money. Maybe we should be more open to coming up with a way to serve that demographic. It's like amazing it's taken so many decades for the industry to adjust, but it's shockingly slow and sometimes stuck a little bit in the past.
Yeah. It is, the wake-up call, I think, for many is when a financial advisor has a client, maybe it's the man in the household, and perhaps there's a divorce, or there's or the client passes away. Listen, 70% of women leave their husband's financial advisor after a divorce or a death.
So obvious with divorce, but with death, it tells you what a terrible job that advisor did speaking to both of those. And, I've heard stories from advisors about people kind of aghast at somebody ignoring the spouse in the room. It's just a totally wrong approach. How does BlackRock help their advisor clients address this issue? So
we believe there is such an opportunity for advice here. Right there, there's just this whole world of women who want advice. They want a coach. They want a partner. And so what we do is we work with financial advisors to help them better serve these clients. We do that through products. So for example, women want to be able to customize and personalize their investments to things that are important to them. So we'll talk about direct indexing, but direct indexing and what we're doing through Aperio is a great way for an advisor to serve his client and help her have impact with what she's doing. We also care deeply about educating advisors on this. And to your point, it's not that the industry just woke up, it's that nobody was really talking about it. And so now we're really invested in talking about this and helping and doing events and getting advisors to bring their prospects in, and we'll join them. We are a minority investor in a company called Willow, which focuses exactly on this. It builds practice management and education and actually helps connect female investors to advisors. And so we're really focused on this, and it's just such an opportunity for advice, but also an opportunity for advisors to grow their business.
So you mentioned Aperio. Let's talk a little bit about direct indexing. I'm a big fan of it. We happen to have started on a different product 5-6 years ago, so we've been pretty locked in on that. Why do you believe it's gaining so much popularity amongst both advisors and clients?
Yeah, so direct indexing, it still sounds like a new phrase to many. It's been around for quite some time. And previously it was really used for ultra high net worth families. And direct indexing, an ability to create a portfolio, a custom index, if you will, of securities that you can choose and select what securities you want in that portfolio to align with how you want to invest. And you can also then manage taxes more effectively in there because you can tax loss harvest. And so it's a brilliant approach for not only aligning with your beliefs on how you invest, but also really living in an after-tax world. We need to better look at tax alpha in our investment portfolios.
So I'm so glad you said that. When we first started working with O'Shaughnessy on their product, I was under the impression that it would first be, like, the most common use case would be, hey, I don't want tobacco or guns, or I don't want this, whatever. I know the New York Bishop's Archdiocese investment pool uses it to say, hey, we don't want abortifacients in our portfolio or anything related to stuff that is in contradiction with our belief system. I thought that would be the biggest use. And then, hey, I work for Apple, so I don't need all this tech. You could tune down tech in my portfolio, and then taxes would bring up the rear. I had it exactly backwards. In the past 5-6 years, after tax returns, tax alpha seems to be the dominant usage for this. Concentrated portfolios, low basis cost, inherited stock, things like that really are a challenge to dealing with capital gains. Tell us about BlackRock's experience with this.
Yeah, so we agree completely. In fact, back in 2021, we acquired the firm Aperio. And Aperio was a pioneer in direct indexing. Aperio led the market working with ultra high net worth. They called it the new institutional for the purpose of tax management, after tax returns. And you think about it, we live in an after tax world. I bought my coffee with after tax dollars, yet we manage our investments before taxes. And so we saw this trend coming, and we could have built it. It would have taken us probably a lot more time, but we saw what Aperio was doing and their capabilities and just their approach. And we thought, man, if we could match that with our distribution reach and our scale, we could really make some wonderful solutions for our clients. And that's what we did. We acquired Aperio, and we have a very significant direct indexing business. And to your point, Barry, it is predominantly tax customization, tax management.
Right. Especially when we see markets are at all-time highs, people are sitting on enormous gains. Sometimes that becomes very concentrated, to say nothing of people who work for tech stocks and they've accumulated, or other companies that have just accumulated so much value that, hey, maybe I have too much single stock risk and I want to diversify into things. Tell us, what else does BlackRock do with direct indexing? How do you differentiate yourself? For everybody these days seems to have a direct indexing product. What makes BlackRock's special or unique?
Yeah, so, one of the things that we did is when we acquired Aperio, we already had a very significant separately managed account business. I mean, for decades, we had fixed income and active equity, and what we did not have was that direct indexing capability. When we brought Aperio into BlackRock, we then pulled it all together and said, how can we actually make all of these capabilities together better serve our clients? So that means, for example, tax loss harvesting on muni portfolios, right? So being able to take a capability and not just do it on equities, but do it on fixed income. Last year, we acquired a company called SpiderRock. I'm not sure if you're familiar with SpiderRock.
Structured notes.
Yes.
We've used them in the past.
Yeah, and option overlays.
Similar kind of not quite the same, but occasionally similar, a different solution to a similar problem.
Yeah, and to your point on concentrated stock, what a great way to hedge that concentrated stock position. If I want to continue holding that stock, but I want to hedge against it and manage the risk, or I want to manage for tax implications, why not run an option overlay on top of that? And so the beauty of what we're doing now is we're bringing all of these discrete capabilities together into one portfolio, one holistic offering. And so we'll be able to work with advisors and say, let's look across your client's entire book and let us help you build a whole portfolio of public markets, private markets, direct indexing, option overlay, all in one. Really solving for unique needs, customized preferences.
Really quite fascinating. So you mentioned you work with a lot of different wealth management firms. What does that relationship look like? What are these firms looking for from BlackRock?
So I remember when I first started in the wealth business years and years and years and years ago, the relationship between asset managers and wealth management firms was often a kind of a vendor relationship.
Yes.
Right? It was, you have a product, let's put it over here. Our position and our partnership with wealth management firms today is the only word I would say. It's like true partnership, right? It's aligned interests. We are there to not only provide them with investment capabilities. By the way, we have incredible breadth to do so, but we're also there to help them with their technology needs, their operational and scale needs, their advisory needs. How can we help them think through how they can grow? Organic growth, that's everyone's challenge. How do I grow organically? Well, you have to scale your business and increase your margins to do so. We help them think through all of that. And the other thing that we do is we have incredible people that are so expert and working with these firms and advisors every single day to help them achieve their goals. And our view is if we can help our clients, the wealth management firms and their advisors grow, we'll naturally grow with them, right? So our job is to help them grow.
So let's talk retirement. We're recording this post-Labor Day, but by the time this comes out, BlackRock's big report, the Read on Retirement, will be out. Tell us some of the big takeaways for this.
So it's really special for me personally because I've just now returned into the retirement business and have the responsibility for this retirement business. And I say it's a responsibility and an honor because we think about the 35 million people across America that we are helping to save for retirement. Like that is what we do. Over half of the assets at BlackRock, not many people know this, over half of the assets at BlackRock are helping people save for retirement in some way.
Really?
Over
so
half.
When you say that, it's 401ks, 403bs, IRAs,
pensions, DB.
Wow.
Yes.
That's amazing.
Over 50%. And
I would not have guessed that.
Yeah, not many people know that. And so, it's something that we are so proud of. And really, for me, it was always my North Star. I remember when I was first in the retirement business at BlackRock, I was able to go home and tell my parents what I did and explain it to them in a way that I felt so good about and they understood. And that's what we get to do every day. You mentioned the survey. So it's our 10-year anniversary of doing the survey.
Wow.
We've been doing it for a decade now. And every time we go out, we go to plan sponsors who are the employers building the plans and offering them to their employees. We go to the savers who are the employees at massive corporations. And then we also talk to retirees, people that have saved and had access to a 401k plan, but they're now no longer working. And they're in retirement. And so this year, I'll break it down in this way. Savers, those that are still working, the employers of these, or the employees of this company, savers have the highest confidence we've ever seen. Like off the charts confidence. Now, it's come down a little bit because of market volatility. And I think what that calls out is, of course, we're all more confident when markets are
right.
rising. But very strong confidence in their ability to retire. However, we've seen savings come down. And so the question is that because of confidence?
When you say savings, we mean savings rates.
Rate.
Right.
Savings rates have come down. Thank you. And so the question is that because of confidence, or is that because actually people are spending more money? They need to, maybe inflation, maybe, right? So we have to dig into that a little bit more. But importantly, savers are seeing more confidence or feeling more confident. You then ask the people in charge, the experts who are building those plans. Confidence is very low. In fact, lower than we've seen. And I'll come back to that in a moment, but I think there's a really interesting tension there of perhaps overconfidence in savers and reality in those building the plans. And then when we move on to retirees, very low confidence once they've retired in their ability to actually figure out how to sustain their life in retirement. And so some of the actions or some of the insights that really came out of this, one, savers are looking for access to professionally managed solutions. Think target date funds, right? Life path portfolios. BlackRock invented the target date fund 30 years ago, but target date funds are very, very important. Two is savers are looking for some type of clarity or solution around guaranteed income. Give me something that will just tell me what I'm going to be able to spend every month, and better yet, make that guaranteed so I know I have it every month.
So what does that look like? Are we talking an annuity product or something else?
So imagine a target date fund with a guaranteed income sleeve in that. So we have a product called LifePath Paycheck. LifePath Paycheck is among a few other solutions in the marketplace, but LifePath Paycheck is the fastest growing guaranteed income solution. What's amazing about this solution, though, is that it gives employers and employees the choice to turn on that guaranteed income. So you're investing, and then you come to a point and you decide, do I want that guaranteed income?
Flip the switch.
Huh,
really interesting.
Really interesting. And then the third point is people, both employers and employees, are saying we need to close the gap on this savings shortfall, and we need to find more returns and more protections. And so that's really where you start to point to private markets.
So I think of the traditional retirement savings as classic 60-40, and what I've been reading about and hearing about for the past 10 plus years is, hey, 60-40 isn't going to get it done in the future, especially with yields as low as they've been up until 2022 anyway. How do you see this side of the business changing? Is it no longer 60-40? Is it 60-30-10? Or what does this look like?
Yeah, so it's, the one thing that's different about the retirement space is it's versus the wealth space is retirement is quite slow moving. The market itself is quite slow moving. And so if you actually look back 20 years, I would say there's probably less change over 20 years than we'll expect to see over the next 10. Meaning people are getting very focused. Policymakers, employers, asset managers, record keepers, on how do we close the gap between this retirement savings shortfall? And so to your question, the 60-40 worked. It works. But actually, if you were to have a 50-30-20, but strategically and thoughtfully make sure that glide path, that target date fund that also incorporates private markets, is doing so in a way that helps people get more diversification, gain alpha, possibly gain more income. We've done studies that show you can get 15% more return on a portfolio with private markets, a target date fund with private markets, over a 40-year retirement. And so that's something to talk about.
Not nothing. That's pretty substantial. Coming up, we continue our conversation with Jaime Magyera, head of BlackRock's U.S. wealth advisory business, as well as head of BlackRock's retirement business, discussing the rise of alternatives in the investment space at BlackRock. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. My guest this week is Jaime Magyera. She is the head of BlackRock's U.S. wealth advisory business, as well as the head of their retirement business. The firm manages over $12 trillion. So let's talk about alternatives. This has been one of the fastest growing space in investing. Tell us what BlackRock is doing. I think of BlackRock of iShares and biggest manager of public equities and bonds in the world. What is BlackRock doing with alternatives?
So if you think about the capital markets, public is only one piece of those capital markets. And for so long, private markets, the other part of capital markets, have been utilized for institutions or even the ultra high net worth. And so there is a world to believe strongly, an investment thesis, that if you're going to do the best thing for a portfolio or an investment, you need full exposure to public and to private markets. And so BlackRock is doing a lot to help advisors and their clients have easier access to private markets. So you may recall last year, we had a whirlwind news announcements around HPS, GIP, Preqin, 3 acquisitions, all related to private markets. Preqin related to data, GIP infrastructure, HPS credit, and private financing. And so we acquired these firms so that we could offer to our clients not just the full power of the capital markets through public, but now also through private. And so we're very focused on really democratizing access, helping everyday people, when appropriate, gain access to this very important part of the capital markets.
And I mentioned earlier 60-40. You peel 10% off the 60 and 10% off the 40, and you end up with something that looks like 50-30-20. Mm-hmm. Is that the future of this? Because typically we see a lot of privates. They tend to be locked up for a long period of time. They tend to be complex to administer, custodians and reporting and fees. It's like you buy an iShare, it's easy. You want to get involved on the private side, it just seems so much more complex for anyone less than, I don't know, pick a number, 20 million, 10 million, right. 5 million. So what does the future of alternative investment look like at BlackRock?
Yeah, so you hit on it, right? I mean, it was so hard for people to gain access to it. It was complicated if they were able to get access to it. And to your point, liquidity was not necessarily a top priority for various reasons. When you think about where the market is going now, there's just been so much change over the wealth industry on how the wealth industry as a whole is starting to modernize access to private markets. And so one thing we are doing at BlackRock is we focused very much on technology partnerships that allow and relieve the advisor of all of that operational complexity. So you think about a firm like iCapital. iCapital relieves,
of which you are on the board of, correct?
I am on the board. And, iCapital has done so much to actually pave the way for advisors' ability, wealth management firms' ability to access private markets. But they are a technology platform. You still need the products. And to your point on drawdown and liquidity, we've done so much work to build solutions that actually are semi-liquid and that provide that liquidity on a regular basis for advisors and their clients. And so that's something that has, really held advisors back in the past. I think the last point, Barry, is it's still new to so many, and there's a lot of education that's needed.
Sure.
And, it's education on the asset class and what does this really mean? And how do I actually strip the 10% here and the 10% there? And so we've gone a step further to say, how do we make it even easier for advisors to build portfolios? Not that I have my private markets over here and my public markets over there in another account, but instead, how do I build a portfolio that's one account and it holds public and private together in one portfolio that's professionally managed, asset allocation, all of the due diligence has been done. And so recently we've engaged in partnerships with firms like GeoWealth and iCapital to be able to bring models to market, strategic asset allocated models that are professionally managed that incorporate private markets alongside of public markets.
So the pushback I hear from various people about alternatives, they're expensive, they're liquid, you have these long lockups, doing due diligence is complex and expensive. All of the back office aspects seem to be like a series of one-offs. There's no real scalability. How are you addressing these issues?
We have found a way to scale and make it more convenient. So all of that work that you just talked about, the due diligence, the operations, the complexity, we have taken that on. We have built model portfolios that do all of that for the advisor. The advisor just has to offer that to their client.
Is this in an SMA or is this, how does this, so my firm, we're BlackRock, Vanguard, a handful of other, the bulk of our portfolios, either direct indexing or mutual funds or ETFs, looks like that. Some clients say, what do you guys offer in terms of alternatives? And we have to click off and run a stuff. And what I've noticed is once you start working into here's the cost and here's the lockup and here's what the reporting looks like and it's held at a custodian here, the complexity tends to be like, is this really worth it? Well, theoretically, it provides diversification. And historically, there have been some cases of outperformance. All that comes off the advisor's plate and you guys handle all of it.
So if an advisor wanted to build a portfolio for you, you're the client, the advisor could call BlackRock, could say, I want to build a custom portfolio. I want it to have this component of public markets. Maybe it's iShares ETFs. Maybe it's direct indexing, Aperio. I would like it to have this component of private markets. Perhaps it's BlackRock Credit, BlackRock Equity. On the private side, we will customize that for them. And then it's waiting for them on a platform like GeoWealth which is a GeoWealth well, a technology platform that will automatically rebalance it for them. And that advisor can now then invest their clients in that portfolio.
How about if a firm comes up to you and says, hey, we're pretty good on the stocks and bonds side. We really need help on the alt side. And we have such embedded long-term gains that it's painful to peel too much off. But going forward, we want to build this into what we offer and add this to existing clients. What does that solution look like?
Call BlackRock. We have a team of, you asked about CFAs earlier. We have a team of CFAs, portfolio consultants, tax economists who do nothing but work with advisors every day on solving those problems. They will work, they will consult, they will help them take the portfolio they have. We want to meet the advisors where they are. Right? So we want to help them build on what they have. And we will work with them to take that portfolio and transition it into whatever the destination is they're going for. We'll work with them in a way to do it tax efficiently and at the appropriate cadence for their client.
And you guys very successfully took crypto and Bitcoin and put it into an ETF. Are we ever going to get to a point where alts become an ETF product?
Look, I think there is a world where so much can happen, right? In the next 5 years, I think we're going to see a lot of things around private markets. Part of that is solving for data and having the transparency around the private markets. What is an ETF, right? It's transparency into that index. Part of our thought process in acquiring Preqin was being able to offer data transparency around private markets. But I also think that sometimes people naturally go to ETF as kind of shorthand for liquidity, convenient, and low cost. And I think there's a lot of ways that we have to figure out as an industry, and BlackRock's working on this right now. How do you structure and build vehicles that allow for liquidity, allow for lower cost, and allow for easier access, less complexity around private markets? Maybe it's an ETF, maybe it's something else.
Yeah, liquidity is always the challenge when you have an investment product that by design is supposed to play out over 5, 7, 8 years. They're not public for a reason. They need the breadth for whatever that market cycle is to realize those gains. So I get the challenge. What are you doing to educate advisors and clients about what this process looks like?
I'm glad you asked that because I keep coming back to liquidity is a challenge when it does not match an expectation of a client. And so advisors need to fully understand what they're working with when they delve into private markets. And in some cases, it is a 5 to 7 year lockup if they're doing drawdowns. In some cases, you do have a liquidity interval every quarter. And so we are working with advisors all across the industry to help educate them on the new type of private markets, the new vehicles, the semi-liquid structures, but then more so we're working with them to help them understand how do you actually put that in a whole portfolio. Talk to me about how private markets sits alongside of public markets and what that does for the risk profile, for the return profile, and for the liquidity profile.
And BlackRock launched a model, I want to say earlier this year, that uses both private and public assets under one ticker. That sounds like really challenging to put together. Tell us a little bit about that.
Yeah, it was challenging, very challenging. And it was something that we could not do alone for all of the reasons you mentioned. It took operations and technology platforms like iCapital. It took operations and rebalancing and trade platforms like GeoWealth to be able to allow us to deliver this portfolio. So this was something that we announced earlier this year alongside of GeoWealth and iCapital. And it was the first of its kind in the industry, a model portfolio that in one model, in one account, you can have public and private automatic rebalancing customized for your client, done so easily, so conveniently.
Some of what you're describing sounds a little bit like OCIOs that kind of were the rage a few years ago, outsourced CIOs where a professional manager can bring a higher level of professional wealth management to a smaller shop. Tell us, is this similar to that or what are the parallels?
Yeah, it is one of the most accelerated trend we are seeing in the wealth market right now, which is this whole notion of outsourcing. And whether an advisor is doing it because they want to professionalize what they're offering to their client, or whether an advisor is choosing to outsource because they want to save time And their value is being with the client and talking about the holistic wealth plan, not the investment management component of it. And so they turn to BlackRock to be the outsourced provider. And so we have a models business, which is effectively an OCIO business. A models business for the wealth channel is $350 billion today. It's grown rapidly over the past few years. We think that'll double in the next few years. And it's because advisors are turning to us to say, please let us outsource to you. And it's not just advisors, wealth managers are doing the same. Because again, wealth managers are going to focus on their core value, which is serving their clients, helping their clients build financial plans, and helping them navigate their wealth picture holistically. They turn to BlackRock to help them scale their investment management, and that's where our outsourcing capabilities come in.
So we've talked about wealth management, we've talked about iShares, and as well as Alpha Pursuit and retirement planning. My last question for you is, what do you think advisors, clients, investors are not thinking about, but perhaps should be? What important topics? It could be an asset, it could be a geography, it could be a policy or data point. What do you think's getting overlooked, but just shouldn't?
I think taxes is still not being discussed enough. Taxes as a concept. I mean, there is so much value you can bring as an advisor to your client by just having that conversation, asking the question. So I would encourage everyone to do that. That is such a way to build loyalty, trust, and deepen relationship. And by the way, your client starts to tell you where they have assets elsewhere. The other area I would say is just really thinking about the future growth drivers of our economy. So infrastructure. AI. We didn't talk about AI, but it's
going to be another
thing. It might turn into something, right?
It's going to be big one day. Exactly.
But you think about some of these future growth drivers. Infrastructure is part of why we acquired GIP, but we have iShares solutions that really align with infrastructure as well. And I just think that's such a under discussed opportunity.
Really interesting. All right, I only have you for a few more minutes, so let's jump to our favorite questions that we ask all our guests, starting with, tell us about your mentors who helped shape your career.
Oh, so this is such a good question and hard question. I will answer it this way. There are so many. I love to have a board of directors approach. Like I have this whole crew of people that I go to for different things. And I truly, you mentioned Salim Ramji. He's one of them. Martin Small, Rob Goldstein, Rob Capito, Mark Weidman. There's so many. Ann Ackerley, who used to run the retirement business at BlackRock. And they've all played a different role in my career and in my life.
Really, really interesting. Let's talk books. What are some of your favorites? What are you reading right now?
Llama Llama Red Pajama.
To your kids at night? Is that what that is?
I have a 4-year-old. He loves Llama Llama. So any Llama Llama you can imagine. But actually, I just finished a great book for the second time, A More Beautiful Question. Warren Berger. It talks about the art of inquiry. And using inquiry to, the heart of any innovation. Why does the world not have this? What if the world did have this? How do we get the world to have this? And so it really talks about the art of inquiry as a way to better understand, to fuel curiosity, and to innovate and create better solutions.
I love that name. I'm going to have to check that out. Let's talk streaming. What are you watching or listening to these days? Netflix, Amazon, podcasts. Tell us what's keeping you entertained.
So I have this barbell approach. I go, I love reality TV.
Oh, really?
Below Deck. Do you watch Below Deck?
No, but I know plenty of people who do.
So good. But that's kind of one side of it. The other side of it is I like intensity. So like Mayor of Kingstown. I'm watching Terminal List. Dark Wolf right now. I think that's on Amazon. It is very good. Basically,
Chris Pratt?
Navy SEAL turned CIA operative. Very
interesting,
good.
Right.
Yeah.
We just finished Killing Eve.
Oh, I haven't started yet.
My wife watched it, loved it, and said, you have to watch this, and she rewatched it with me. If you like that sort of high-intensity espionage, really great cast, really strong recommend. So our final two questions. What sort of advice would you give to a recent college grad interested in a career in retirement services, wealth management, investing? How would you advise them?
So I go back to my entry into this industry. I didn't know the first thing about anything. I didn't think I wanted to be in this industry, but I went in with open eyes and I asked a lot of questions. And in some ways it was because I didn't have the experience, it made it easier for me to be just like an everyday person that we were trying to serve. And so I say, come into this industry. You don't need a traditional background. In fact, I prefer people not to have a traditional background of finance or econ. Come into this industry and help us make it better.
Love that. And our final question, what do you know about the world of wealth management, retirement services, investing today? Would have been useful 25 years or so ago when you were first getting started?
I was really fortunate to have my father tell me that the first thing I needed to do when I got a job was start saving in an IRA and in my 401k. And even when it hurt to do, I did it. I wish I had known back then that I could have been saving in many different ways. I could have been investing in many different ways.
Right.
And so, to anyone who's out there thinking about, are they saving enough or investing enough? The answer is probably no, and you should do more. And there's so many ways to do it. You can use a financial advisor. You can go direct. You can do it in many different ways, but just do it. Just start. That's something I would have done.
Really, really good advice. Thank you, Jaime, for being so generous with your time. We have been speaking with Jaime Magyera. She's head of BlackRock's U.S. Wealth Advisory Service, as well as head of BlackRock's retirement business. If you enjoy this conversation, well, be sure and check out any of the previous 550 we've done over the past 11 years. You can find those at iTunes, Spotify, YouTube, Bloomberg, wherever you find your favorite podcast. And be sure and check out my new book, How Not to Invest, the Ideas, Numbers, and Behavior That Destroys Wealth and How to Avoid Them. How Not to Invest at your favorite bookstore. I would be remiss if I did not thank the crack team that helps put these conversations together. Meredith Frank is my audio engineer. My producers are Anna Luke and Alexis Noriega. Sage Bauman is the head of podcasts at Bloomberg. Sean Russo is my researcher. I'm Barry Ritholtz. You've been listening to Masters in Business on Bloomberg Radio.